Hey everybody, welcome back to Futures Trading. My name is Mike Fairborn. Nice to be with you today. I'm joined in the chat by my friend and colleague Brent Moores. Folks, seen some moves in the market early today, and we're clearly above our center pivot line. And so there are some potential setups that we might get during our discussion today. We'll definitely be looking at pivot point trading today, as well as some of the concepts of the Fibonacci bounce. Who knows? We might get actually a trade in there as well. But over a broad kind of range of you could say futures products, some commodity products as well, as we take a look at that. But looking forward to going through that. And welcome to all of you. Nice to have you here today. We have Carol, Jack, Life of the Fast Lane, Tom, Michael, Kevin, Gary, and others. Welcome all. It's nice to have you here. David, Sharon. Please let us know if you have any questions, comments, throw those into the chat so we can assist with that. Well, let's get started. There's plenty going on right now, so I want to take a look at what we've got here on some disclosures to get going. So first off, futures and futures options trading does involve substantial risk. It's not suitable for all investors. There is a risk disclosure statement listed right there. Futures accounts are not protected by the Securities Investors Protection Incorporated, SIPC. Please be mindful of that, as well as other points listed here on this slide. Wanted to also note some additional points that the paper money software application is for educational purposes only. And there you go. Let's go ahead and dive on into it. And we'll take a look and see what we've got right now in our markets here and how they're just kind of faring as it stands, just kind of big picture as we're looking at it up in the upper left-hand corner of the screen. You can see we are up on the day. I like to just, go ahead and take a quick look at the percentages, seeing where we're specifically on the market indices here. The NQ seems to be leading the way. Everything's up right now, and you're going to see some similar charts here in just a moment. So what I want to do, and what we'll always do in this class, is do a quick overview of our futures accounts so we can see all of them right now. Because in this class, oftentimes we are just looking at some of the shorter term trades within the market. We do like to combine those with the longer term trends as well. So multiple time frames is helpful. A quick note though, actually I should just go back to this real quick. As we look at multiple time frame, the potential for multiple time frames here, you can see that each of the markets, the futures market indices, are up. The NQ, everything hit. Okay, so we hit a high last week on the a couple weeks ago. Was that last week? Maybe it was towards the end of the prior week. But coming off highs, the YM the same, and the NQ at least an annual high there on the RTY as well, the Russell. So big picture, we have trend strength clearly across the board on each of those. Now what we want to do is we kind of narrow it down to the time frame that we're generally looking at the most, right, within this class in terms of potential paper trades here. And that is going to be our 1 day, 5 minute charts. And so as we look at that right now, let's pull this up and just kind of narrow each of these down. Now, one key thing you're going to notice right from the get-go, and we keep these center pivot points on for this very reason, is what is the current direction of each of these? Are we above or below the center pivot? The last couple of weeks we've been below, but now we are clearly above that line right here. And as you can see, we have been clearing even yesterday's high. So normally the next thing we like to look at, or oftentimes traders can look at, do we clear the prior high? Are we above that level, at least on a short-term basis? So therefore, there may be, in fact, support through these levels or not. We're coming down right now as we're getting started here, right at the opening bell. So let's just see what we get. But yeah, the YM above its highs, there might be some support here. And as you can see over here for the RTY, possibility of a bounce maybe occurring, a little bit of a candle pattern there. But broadly speaking, everything looks really quite similar right now. Actually, we've broken above prior highs. Everything's above yesterday's highs. And we are pulling back now too with that opening bell. So there you go. Not sure what the news was. We were not pulling back previously. Curious how some of the other commodities will be doing. We could take a look at that in just a second. But what was interesting on each of these two is we were getting up towards the pivot point that we could potentially take a trade on right here. So the R1 level, we were right at it. But sometimes when you do get an R1, you get a test off the R1 like resistance, like oftentimes we will get. and then you're going to get another bounce off of it. We came back down. So in other words, did we break above the R1 level? We did not. But this could have been the trade that we could be looking at today, which would be a play between the R1 and the R2. Now it's not too late. It's just the opening bell. Sometimes we'll get a bounce. Let's see what does unfold here. We have not been getting too lucky in this class in the early morning in terms of getting this trade on for the past, I want to say 3 weeks now. Previously, I mean, within this class as I've taught it, I've had trades months on end actually, but the last 3 weeks we've been kind of not getting too lucky within these ranges. However, we'll see what we do get throughout the remainder of the day. Just generally during our class, we've been able to get some of these in, but of course this could be open out throughout the rest of the day. So anyways, quick note, we're running up to this point. There is resistance. A quick note, I don't want to pass this up because you don't see this every time. If we come over here and we do see a resistance test and a resistance test, although within the trade that we look at here, we can take a trade, maybe there's 2 ticks above this level, and then close it out, potentially if you get 2 ticks below the R2, and that could be the potential trade. But if you're getting a test of resistance through here, and possibly even historical resistance, what sometimes traders like to do is they might like to wait for an additional confirmation instead of taking the trade as it gets 2 ticks above the R1 level, instead being a little bit patient and waiting to see if it can hold above that level by at least 2 bars. Okay. And that could also mean that in many cases you get these that'll come back down and retest right here as well in terms of a bounce. Now this is kind of a bigger pullback on a 5-minute chart. Let's just check live news real quick and see what we've got going on here. This came out right after the open. This is in Mountain Time, so that's the open is 7:30 here, and you can see that Philadelphia Fed's manufacturing gauge shows activity contracted in November. That's almost certainly what happened. It coincided exactly with the opening bell. You can click on this and read a little bit more. That's why waiting for those economic announcements to come out can be very, very, very beneficial. Waiting to see what did happen, what does happen on those, and get those out of the way. Because a lot of times we mentioned in this class too, you can wait for, I'll just write it down here, the first 30 minutes of the day to get those announcements out of the way. And sometimes earnings announcements as well will pop up pre-market, and you get that out of the way. So you're really looking, I guess in my time frame, it would be like 8 o'clock. But whatever it is, a half hour after, that's 8 a.m., that's Mountain Time. But a lot of volatility can occur with that. You're seeing a great example of that on the charts right now. So just be mindful of that. And you can obviously get that news right here, which is just great. You're right off the chart there. Okay, I have moved this down to a medium font size. Let me go ahead and just put it back to a large for now. We may need that large here, or the medium back in just a minute. Okay, a question came in earlier too that Jack had brought up about the center pivot point. And do we take trades off the center pivot up or down? The short answer to that is yes, we do. That is a big move down. And, we could actually be looking at a trade on this right now based upon just the size of these candles coming through. Just a quick note, let me just double check and see how we're doing on our center pivots across the board. As I got explaining that, you can see some of these have already been breaking down here. But we've already had the breakdown, but that's okay. What we can do is watch and see if we get a recovery up above the center pivot and then another breakdown. But I'd like to put a trade on regardless. See if we can get that under our belt here. Let me go back to this real quick because I think we can go into the pivot points and I can highlight this. So if there was an expectation of a decline coming down through here, let me show you what this would look like. I'm going to go ahead and just open this up right now. I'm going to go into a single trade at this point in time. And I'm going to pull this up and just kind of highlight a few details. Okay. So I'm just going to look down at this for a second. But what we'd be doing here, oh, it does show up on the single. Cool. So what we've got is a bracket order. We've got a limit and a stop and a limit. Now, a quick note on the limit orders and the stop orders. In fact, I need to pull this up and just kind of go through it again right now. Anytime we are shorting, in a position to short the markets, or sell, specifically sell contracts short, there is unlimited risk to the upside, right? It can be unlimited because we are short. There is no upside to a move over here, and that can be just a key point to be mindful of. Now, a quick note too is we were talking about limit orders, etc. In fact, let me just scroll back to this. I think we had it over here. If not, I'm going to go ahead and just read through it. I just want to make sure everybody's clear on that because you need to be aware of getting fills on there too. So sorry, folks, just one second. I'm going to pull it up. See if I could just get this in place here real quick here for us. But let me just start by explaining that a limit order, stop order, they're not guaranteed in the market. In fact, once triggered, they do compete with other orders in the market. So just something to be mindful of as you go through. And we are, talking about limits and stops specifically. I'll try to get we can bring more discussion to that in just a moment. But for now, let's do this. Let's talk about the trade here and setting this up. And so what I want to do is, first of all, set these up a little bit wider. I've got a template set up already, but I want to go through the process of it. So let's do this. In case we were to break lower again, and we'll look at this trade because we bounced up above it, it's giving us an opportunity to maybe take the trade to the downside with a target somewhere around the S1 level. What we could do is we could set this trade up right now, and we're looking to sell one limit. If we go back below this level, I'm going to really kind of zoom in on it here. If we dip back below here, what I'm going to do is I'm going to go ahead and click on sell, and you can see I've got bracket orders in place. If we dip below her, we'll be looking for a trade that could potentially dip down to this level. We'll decide if we want to take it off at the midpoint, which is right down through here. Technically, we're below it. I'm going to go ahead and put the trade in. We're going to sell the market right there and push that through. Okay, we don't know what we're going to get in terms of a fill, but I'm going to go ahead and show you this. So the limit or the target would be somewhere, maybe 2 ticks above the S1 level. I'm just going to drag that down. Real easy to do. Just click on it, drag and drop. Now, our stop order is going to be based upon what we discussed last week, and that's going to be based on our ATR, a 2 ATR specifically. The 2 ATR right here, we've got an ATR of about 8. It's not quite there. I'm going to go ahead and average that at 8. So from our entry point, which was just roughly right here, I'm going to go up 16 points or so. Now, we could choose 8 if we wanted to, but this is kind of notice that big spike that we had? This is kind of a question. If we want to keep it up, it's just going to be just above. This is interesting. It's just above our VWAP line as it stands right now. So it's about right here. I'm just throwing in some numbers. We don't know how it's going to stand, but this is kind of the setup right now. Now, a couple of things as we get into this, as we talk about this specifically, what I wanted to say was, let's pull this down. I did it on the ES. Now, oftentimes what we talk about in this class is doing it maybe on the MES, which is the micro, which is 1/10 of the size of the contract in terms of gains and losses. I can show you that here in a second, but we went ahead and did it on the ES. So the question that you might want to ask yourself is what kind of moves are we seeing on that in terms of a tick up, a tick down on the ES? What does that equate to? Well, if we come over here and we just drop this down off to the right-hand side of the ES, we could see over here under futures, there's your tick sizes. There are your tick sizes, you can see. And a quarter tick, that's the minimum tick size, 0.25. You get 4 of those in a dollar's move, right? Each one of those is $12.50. So if you look at it, that's going to be what? Well, you're looking at $50 a point. 50 up or 50 down based upon what you're doing per contract. This is on a per contract basis. So it gives you a sense of what you're getting there. Okay. Now the MES, which is what we'll normally do it on. We just did a quick trade today though, just to kind of highlight this and show it, is right over here. The MES, if I click on the MES, it's $1.25. So what are we talking about there? $5 for a full move for one contract. So quite a bit less there. I wanted to throw a trade on here anyways, just to see what happens. But again, we are going against the longer term upward trend, but that sharp spike to the downside, it was interesting because the size of these bars was so big. Okay, so yeah, so I wanted to highlight that, but let's just jump over here and go back into this and see where we're at. You say to yourself, gosh, Mike, it's sitting right around the center pivot. Why does it stop close to that? Why does it bounce around this? Why did we maybe touch off of this level? We don't know exactly why, but that's why traders will oftentimes use these pivot points. In fact, what I did do, I've got it over here too. Let me pull this up. I did repost this, uh, the pivot point link over here, right here for pivots. And as you can see over here, this is the formula for pivots. The pivot points, just as a quick reminder, refresher, those who haven't seen it, specifically, this is the formula for that. You can get it right off my X handle. Feel free to follow Brent and I on X as well. We'd love to have you on board if you are, in fact, interested to do so. But there we go. I've gone ahead and just put that in. This is all built around yesterday's closing price. So that's why traders will use these, because there is a tendency for these to stand firm at these levels. Sometimes they bounce around. They don't have to, but they can gravitate. You can see the overnight activity around the center pivot point, but that's why they're used. Okay. So with that, by the way, a couple weeks ago, because I did have somebody cover for me last week, but we did talk about using an average true range as a potential exit level. We discussed that as well. Okay. All right. Let's see. What else do we have here? Gosh, okay, let's do this. How are we faring amongst our other markets? This is always interesting to do and see how they're responding as well. But that is the paper trade that we have set up today. So really kind of a bounce off those lows. And you can see actually here the YM did actually bounce off there. Really didn't go too much below the center pivot point as we got that to that level. Now, a quick note is we did take that trade at the center pivot, and a question from Jack earlier was that, do we take these? Well, we did just take one here for the trade, but it's really kind of questionable too. You don't really necessarily have the trend in place, do we? So there's a little bit more risk here. You have to say you can take it up or down, but oftentimes look at the trend. I mean, we just got a new high, but we did not make a new low. We still took the trade anyways. Okay. Which leads me to believe that maybe if prices come down here and kind of slow at the prior level, last low, maybe that's where we take it off if in fact there's not an exit or a trigger up top here, okay? That gets triggered. It looks like it might get triggered. It's the bigger contract, but that's sort of the risk. This is really good to go through. Now, one of the reasons why I thought that and I wanted to say this after the fact, there was just so much going on, but the size of the bars and news, that was a big dip to the downside. And sometimes you get like a 1, 2, you can see the second bar there, 3 soldiers down. Now, if we had anything similar to this breaking through our level, which we did see at the time, we got confirmation that we did break through the center pivot point, we could come down to at least the midpoint line here, the 50% level, which we could shift up and maybe try to get an exit point here as well. That could have been something we could have attempted to do. So that was the idea. It was breaking down very, very sharply. The bars were substantially big, and we saw those bars get big because we were looking right at our, let's see, we were looking at our pivot points here, and the length of the bar, which is what the ATR measures, spiked up huge. We extended out our level to get out. At that point in time, we adjusted our stop, our potential exit right there as well. But that was quite a big range, right? That's 16. That's a big sort of a stop range, actually, even on a 5-minute chart, So keep that in mind. And there's the fill. So it did work against us, but that's how that looks. Now, normally in this class, we will try to take the trades coming from here up to here, or from here down to here. That would be the R1 to R2 or S1 to S2. This would be on the short side. R1, R2 on the upside. Normally that's the game we'll be looking at, because with these upper and lower pivots, generally speaking, we will have the trend behind us, the shorter term trend as well. But there's the stop. Now, that is also above our VWAP line too, as you can see right there. Now, I'm going to give you a quick variation on that ATR. Instead of a 2 ATR, what some traders could do is they could use the average of the range that they're looking at here. In other words, instead of taking the more recent potential stop level at 8 times 2, which would be 16, they might take something that's like, hey, where have we averaged over the day. Okay. And that might be closer to a 5. And so then our potential exit up here would have been closer to a 10, which would have been closer to that VWAP line right there, which would be, in hindsight, less of a paper loss as we've been discussing it. Okay. I'm going to turn over and look and see if there's any questions we have in the chat. And by the way, let me just do one thing too as I go through here. Let's see. Just wanted to highlight something. In addition, I'll get to that in just a second here. Okay. All right, but there is the bounce coming up. Now, a lot of times too, where could resistance come in at? The 50% level. I'm just going to kind of eyeball it 50%. You'll oftentimes see that. You can actually use this too. I mean, you could potentially on a daily chart for even, stocks, for example. I'm going to come down here. I'm going to click. A quick way to get that 50% level is just to go to the drawing tools and go to your fibs right there. Let's click on the fib. I'm going to pull the fib up right there and just say, there's your 50% right there. Now we just crossed that 50 right there. Well, we're kind of at it, but notice that 50 also anchors pretty well with this point. So sometimes traders could look, there could still be a trade where they're getting, you come up to the 50 and then you come back down below the 50. That's kind of a Fibonacci bounce trade, right? I got a little messy. Let's do that again. So here's your 50. We're testing this range, but if you come back up above that level and you come back down, well, sometimes they'll take a really short-term trade back through this level. As a side note, we'll see what we get. It is a little bit volatile when you do get a big news announcement, economic announcement in the morning. And then also we mentioned too, what can factor into that just to be aware of is earnings. Earnings have been dying down quite a bit. Let's go to a monthly week earnings for the S&P 500 since we're looking at it right now. And these are all the companies in the S&P 500 that will be having earnings announcements upcoming. But yeah, it's been dying off quite a bit. Okay. Anyways, that's another big driver that you could see in the mornings as well. All right. Well, that did not go in our favor, but it was a great way to explain and to show the risks of the move coming up and what can occur in fast markets like this too. Okay. So with that, let's go back and look at broadly speaking, the indices again and just see how they're all doing. They're all fair, and we did get that bounce. We're kind of in a setup. What would be fascinating is if some of these, like the RTY, actually came back towards the R1 level on the upside. We'll see if that does unfold. It was, and by the way, the YM as well. It's already kind of bounced back quite a bit. All right. Well, that was one quick trade we got under our belt right there. Let's just do a quick overview of the metals markets before we go back to see how gold's doing. Gold did come down too. It didn't quite break as sharply on that news. Gold can kind of be driven sometimes by fear in some cases. And there you go. Gold didn't dip as much. But look at some of the others. Look at silver. Wow, that really took a nosedive, did silver. Now, silver's tied more into some of the more industrial uses. In fact, right now, it's about 50% of the uses of silver, silvers that's coming out of the ground right now are being used in the solar field, solar energy, and EVs. So there's just a lot of uses for it right now. But silver has not been keeping up with gold. I'll have it for you next time. I'll talk about a different ratio that we use between these two. I don't have it. It was one I had to program and actually get in place on ThinkScript, but I'll have it moved over here into this paper money account next week to kind of show you the variations there that some traders will look at. All right. Let's see here. Let's see. These others are clearly below their center pivot line. All right. Well, let's do this. I want to take a look at the Fibonacci bounce here in just a second. But first, in our pivots, a quick way to get into those pivots right now. You can see us bouncing out that 50% level. Let's go ahead and take a look at the NQ and just see where those are at. So there's a little bit of a failure. Prices coming back down through that level. We'll see if it goes back down again. This is actually potentially setting up for another trade coming down. And notice in this case, you might get the short-term trend in our favor. a lower high and possibly a lower low breakdown. Now, we'll have to get a break below this level and maybe a 2-bar close because we already tested one time, okay, and it didn't work in our favor. So what we don't want to do is immediately take, let's say, for example, a short trade here to the downside again if we already have an indication of a potential for support right there. So if somebody was looking for this as a trade coming back down, you might want to wait for at least 2 bars there. Sorry, folks, we're moving kind of fast here, but we have to on a short-term chart, especially when there's an economic announcement. So, but you'll get the hang of this, as we go through it. A quick note too, we did move below the VWAP line as well. We're just below that, and sometimes, a lot of traders will not take positive trades if you are below that VWAP line. So let's just see what we get here. But if we do hold near this support level, which there has been a tendency to do at the center pivot point, well then there could be in fact a bounce again up there. That's why it's really, really important to take. You have to kind of decide what you want to do here. But we're kind of playing that economic announcement and saying this really broke the trend. Break. Let me show it to you right now. So that's why I'm leading more towards a downward move as opposed to an upward move, because we had some sharp breaks there very quickly on news. Because again, remember, we have to determine when it comes to the center pivot point, are we going to go up or are we going to go down? Bar length, massive here, break, but there's the bit of recovery. So let's just see what we get here. It'd be kind of fun to put a second trade on, but before we do that, I'm going to go up top and I'm going to highlight. We could also look at the YM again, but I don't think there's the M. Yeah, there is the MNQ. So that could be a 10th. We'll go ahead and go with the micro contract here as well, the futures contract here. Micro, okay. If in fact that does come up. All right, let's see. Okay, so just a quick note too on the short selling. I just want to read this quickly off completely. I gave an explanation initially, but when selling short to establish a position, the upside risk to close that position can be unlimited, as there's no upside cap to how high the price of the index can rise. So a quick note on that is important. Stop loss orders on futures are not guaranteed in execution due to exchange rules based on certain conditions at the time of activation. The exchange may reject or substitute an exchange designated limit order for the originally triggered market order. So just to clarify that. Okay, so here we are dipping below there. We did say we wanted to get maybe a close or two below that level, at least a single close, and see where we stand here on this trade right now. Now, the other side is that it could go ahead and break through because the volatility has been big here. So it dipped. It could dip and continue to decline. So some traders might have taken this right here. We're going to go ahead and just wait because there has been a lot of activity here and we did bounce near that level. So we'll see what we've got. There is the MNQ. There's the ES. How's the ES doing? Still holding above that point. The YM, not anywhere near that point, which leads me to believe that there's just strength in the markets, more strength. And then the RTY is actually, like we said, there could be a trade between the the R1 and the R2 to the upside here. But for the bullish side, what do we want to think of? When we come back here and we look at this, do we want to be bullish? Do we believe that the RTY, the Russell, is going to buck the trend of all of these showing weakness, all the other market indices? It could do. It could buck the trend and go higher, but could be a risk factor because everything else is going down. Let me go back into it right now and highlight one other point that you could always think about too. Patterns. Do you see over here with me? This is all occurring right around the R1 level, which is known for, well, it's referred to as resistance, but can it get above there? This looks a little bit to me like a shoulder, head and shoulder pattern right there. There's also that in place. Now that's a really crazy neckline right there that you'd have to break below. But still, if you're breaking below this support level, that could be a warning sign too that you shouldn't be really looking for an upside move. All right. Ooh, A lot going on. This will happen too some days when you get big news. The NQ looks like it's still lower. Okay, so here we are. If we get two closes below this point, we could potentially look for a trade, but we'll be on the MNQ. We'll be using the micros. We can use a couple contracts there. Uh, and if you wanted to look and just see, what we're in paper money here, but if we go into our futures and we take a look at the MNQ, let's go to it. Like we could take a look and see what that looks like right here. It's 50 cents for every tick. So what are we looking at for a dollar's move? In terms of on the chart itself, we'd be looking at somewhere along the lines of, well, $2 per contract, that is. It's going to be quite a bit different. The NQ is going to be 10 times that level amount. All right. So here we go. And we still kind of have to decide what we're going to do here. Get two closes below here. These closes are getting a little bit wide, and you're getting maybe a 1, 2, 3 soldier down. So actually, in this case, for a center pivot point trade, and now do you see how kind of precarious these center pivot point trades are? Jack, you had no idea, but our discussion was going to focus in on that center pivot point. And everybody, through our discussion today, which is interesting, but it's really, it brings into all the experience you've got to try to trade this up or down. Okay, we do not have two closes yet. We still have about 4 more minutes before this bar closes. But then what we could look for is a possible trade back up here and then a come back down. Do you see the confirmation we're waiting for? We don't even know if we'll get that. But then again, within the market, sometimes as we're trading futures, you might be waiting just for the better scenario, so to speak. I was going to give a sports analogy. Yeah, those don't work all the time. But just a better scenario, right, where maybe the probability is favored a little bit more. You could say now that there is truly a change in trend, a lower low, lower high. So this could happen some point during the day. You've got 4 markets to look at here for a setup. You don't need to jump on it right away. But then again, you could also look at some of the other futures contracts too. So there's a lot of different scenarios that we could look at here. All right. So having said that, let's go back and as we're waiting for this scenario, in fact, I'm going to do this so I get an alert, a sound off my computer. I'm going to go ahead and just right click right here towards the top of that bar. If we start to trade near the top of that bar, give me an alert on my computer. I'm going to create a single alert so that it notifies us of a sound. If we go at or above that level right there that I highlighted, we'll be notified of that. Okay. So cool. That's in place. And you can use this throughout the day too, if you wanted to, right? We might have a setup too throughout the day too, where we're getting a breakdown here. And that's a much more of a clear trend, right? We're taking out these major lows down here. So there could be a lot more that we could be looking at throughout the rest of the day. Now, having said all that, let's go back over here and take a look at the overview. And just to kind of highlight what we might have here, also as a secondary type of trade that we could be looking at, and that's going to be the Fibonacci bounce trade. Okay, what that could look like if you're getting a strong spike down. I realize we're going to be above the center pivot when this occurs, but watch this as I go through this real quick. I've just expanded this for now, the chart. I'll go full screen. This is the Fibonacci bounce trade. I'm going to zoom in on it here. Basically, you're taking a range of a high and low here. A lot of times I'll just use the body of the candle. And how this works, this is fascinating. I've used this on my stock trades before as well. Take the closing price of the body of the candle and pull it down to this range right there. Now, there's your 50% point. We talked about that earlier. We found a little bit of support and a little bit right there and a little bit right there. So if the price of the stock, and this is a good, or not, I'm sorry, not the stock, we are talking about future contracts. If the price of the futures contracts come back up to this level and then they go back below the 50%, do you see what happened? We came all the way back down to our zero line. So this could have been the potential area to sell a contract here and possibly buy the contract back down here. It all happened very quick, and we were on the verge of getting a close on our initial trade. The stop came through and the order filled, but this is trading it to the downside. So here is your move lower. Does everybody get that? You're 50% up, and as soon as you trade above the 50, you're set up, and then you get below the 50, you can take the trade down. Now there is a variation here too. You could take the trade off at the, and notice I'm putting the trade in here as a +1 because we're minus the trade, but you start it with a -1. You could do it here. It's sort of the midpoint of the range. It's not exactly the midpoint, or the full trade here. Sometimes if you have two contracts, if we were to go short two contracts, some traders will try to buy one back here and buy another one back at the 0 line to close it out, right? These are closes to close the contract. Okay, so actually we got a lot to look at today as we went through it, but okay, there is your NQ. So are we set up maybe in a little bit better position if we do come back up here? Yeah, quite possibly, because the trend's down. If we come back up to this level and test, we get a trigger on this, we could come back down. The trigger is going to be on the MNQ, by the way, not the NQ, as you can see. All right. Anyways, wanted to explain this. It's rare that they happen so quick both together, but I'm kind of going back and forth between a couple of these trades. Now, that's one that could be looked at, all right, in terms of a Fibonacci bounce trade. You can go through here and look at the other ones as well and see how they set up. Now, a question could come up too. Well, what if we had a longer term move in here and a Fibonacci bounce? Like, for example, if it extends even lower. Well, we could do that. We could look at that as a Fibonacci bounce scenario too. Like, for example, if I come over here, I click on it, and let's just say the low comes in at that point right there. Well, that pushed down our 50% level. So there could be kind of a longer term trade in here if we were to get a recovery, because markets will move like that sometimes. They'll go up to the 50, they'll test, and they'll come back down. Move up to the 50, test, and come back down. Notice it does anchor there as well. We don't know, but that's just something you could look for. Do you see prior levels of resistance or support at that level? Clearly that could add to this being a resistance point. Yeah, it could. All right. It could add to that being, let's say, a stronger resistance level, perhaps, if you've got prior historical resistance there. Now, one quick note is we're looking at the Fibonacci bounce. So this is a different trade altogether than the pivot point trade. The Fibonacci bounce trade. In this scenario that we're looking at, if we were to get a bounce up above that 50% level, we know that we take that trade in the scenario that I explained when we go back below that 50%. So you break up above the 50, you come down below the 50. But if you were to close up above the 61.8%, this is where you do not take this trade. So getting above that 61.8%, you don't take it. In fact, this is something that a lot of traders will use just in their regular whatever trading they're doing with whatever, instrument, or I should say underlying security they're using. If you get above the 61.8%, oftentimes that means that you might not get the breakdown. Some traders will say that they think that it's just more probable that prices will go higher. That's the question. But in this trade, we factor that in and we do not take it. So if you get above the 61.8, you close up here, you don't take it, even if you reverse back down and go below the 50% level. Does that make sense? All right. How did we do on that NQ? Did it go all the way back down to that level? NQ, oh, let's see. I'm sorry, not there, but our pivot point. It was the MNQ, but we'll just look at the NQ as a proxy for that. Not quite, but notice we did come down to that level that we discussed, where some will take that off the 50% level right there. There was your trade. Now, that was the original kind of expectation that we might have had, right? When we put this on, when we began to break back lower, is that we were going to get the move earlier here. But we didn't. Instead, it did a bounce, a fake out, went to the 50% approximate level, approximately, and then it dipped back down again and hit the point. Okay. Yeah, so it can be challenging around that center pivot point. Now I'm just going to take a quick look at the chat and just see how we're doing there as we go through this. A lot of stuff though going. All right. Oh, what news we had? Oh, okay. I think the news was right here. The live news that we looked at earlier. This was right at the open, and you saw markets just move back there, Luke. Everybody right at the open. It was the news itself was the Philadelphia Fed's manufacturing gauge showed activity contracting, and this is one of those leading indicators within the group. And so I don't know how that factored in. You're getting some additional news coming through. Don't know, but that was kind of the big move out of the gates. And sometimes those can cross through multiple pivot point lines. So that was kind of our trade there that we looked at. All right, but that's how you get to it too. Bottom right-hand corner of the screen, just a great way to get it right off the chart. Awesome tool to use, live news right there. And notice that came up for us on the NQ. It came up for us on the ES as well. So really handy to get it all on one screen there. Okay, well, so here is as we look at maybe how things could play out towards the rest of the day. If we do get a bounce off of the support level here, we could make our way up here. Let's say it's a lighter move or a slower move. There could be resistance here at that center pivot point, and then that could be another trade to the midpoint range or down here if that were to happen. But sometimes in that first half hour, which we've already got under our belt, markets will react based upon that early news, unless you get some other major news that shifts in. So the point here, this doesn't always happen, but what can happen is if you get a big news event, which we had right here for the market, and you can see it, oftentimes the markets will be somewhat down on the day too. They could be down on the day. So therefore, that news can give you an idea what the trend of the market's going to be. Last point I'm going to make, because how can we kind of how can we kind of make this more of what I just mentioned, make that more sort of mathematical in a sense, or more defined. Defined is the word I'm looking for. Take the first half hour of the day on the futures market. Use the NQ, the ES, maybe one of those two, and do this to find the trend of the day. Are you going to be up or are you going to be down? It's the first 30 minutes again. So the first 30 minutes we let get under our belt. We've got our first 30 minutes underway. That's the opening bar. And right here, I'm going to try to point to it. Hopefully I'll be right. I believe that is right there, the 30-minute range. And so what we do is we take a bar, we take lines and we draw them off the tops right there and the bottom of that bar. And this determines the direction we trade throughout the rest of the day. In other words, if we are trading below this level, we only go to the downside. We only short, and one of those trades would be potentially, if we traded a bounce off of this level and it came back down, for example, you could do that. But oftentimes, if you're above, below that level, you could trade to the downside. If you get above this point, you could trade to the upside. Does that make sense? You're using the two ranges from the opening bell and the closing bell right there. And by the way, I just got my trigger and it's time for our class to end. So, but you can watch these. It's just a paper trade. You can watch this and see what activity you get around here. But here we are right back to that point, and we'll see if it bounces off that level and comes back down. But okay, so we shared a lot of good information potentially, that you can use within your shorter term trades. But a lot of it, folks, is just defining the longer term trend relative to the shorter term trend, vice versa. So, all right, well, hey, it was good to be with you all today. At bottom right hand corner of the screen, please subscribe to our webcast if you're not already. We've got over 125,000 subscribers. If you like this presentation, if you like looking at these features on a short-term basis, you found anything useful, definitely smash that like button. That does help us out. There is my X handle there. Be sure to follow Brent too at Brent Moores CS. All right, everybody. Well, on that note, look forward to future discussions with you. Have a great rest of the day.